All right. Super. So we had stopped on question 3. Now, question 3, you can see there, the whole 30 marks, they're asking one thing. Prepare the post-adjustment trial balance. This is what you had in your test, in the original test, okay? Prepare the post-adjustment trial balance, okay? So, what now must happen? We quickly go up to see, okay, what information do we actually have? We can see there are adjustments. And you guys, I'm sure by now, you're starting to see, our adjustments, they don't change. It's the same adjustments every single time. We did a stock take, and then there's inventory there, it's stationary. They don't even change to say maybe packaging material or other. Let's mess around with that, or let's mess around with other things. Consumable, it's always the same ones. Okay, so the following information relates, all right, to at 31 August 2021, the last day of the financial year of the business. The business makes use of the perpetual inventory system. Okay, so we don't need to calculate cost of sales. All right, pre-adjustment trial balance on 31 August 2021. Okay, so there we have all our information. Okay, now take note, if something does not have an adjustment, it's a copy and paste, copy and paste, copy and paste. Okay, make sure that you do that. Oftentimes there's no marks there, but sometimes they might be. I would advise that you do so. Because also remember, you're going to need to do the balance. And if amounts are missing, you'll be thinking, I must have done something wrong. But no, you didn't do anything wrong. You just left out some stuff that you should have copied and pasted. Okay. So anyway, so I'm going to read the adjustment and then we're going to look at the answer. So here, an amount of 435 for freight on purchases of trading inventory was incorrectly debited to vehicles expense account during January 2021. Okay, this is very simple. Correction of an error. What do we need to do? We need to obviously remove that from the vehicle's expense and then add it into purchases. Oh, sorry, freight. Yes, freight on purchases, which will affect your trading inventory. Let's see. Do we have a freight on purchases account here? Nominal account section, there's no. Yeah. So it's going to affect your trading inventory and it's going to affect your cost of sales. Because freight out is when we are selling something to someone and then we're sending over the goods to them. Now, remember here they said, let's see, they said freight on purchases. So in other words, and here purchases of trading inventory. So this is actually freight coming in. Can you see that? Because we were then getting our inventory delivered to us. Can you see that? So it's not freight out. Okay. And then remember, freight on purchases is not a separate account in and of itself. Why? Because we're on the perpetual inventory system. If we were on the periodic, it would have been an expense account in and of itself. Does that make sense? Yes. It is affected. Because remember, we incorrectly posted to that account. So we need to rectify it. Yes. Remember, I've always said 2 accounts, at least 2 accounts are affected. Because remember, when we introduce that, then it's more than 2 accounts. You see? Well, in this transaction, particularly, if that was also being considered, then it would be fair. So yeah, that's that. So let's have a look at how we did it. So here you can see there's the plus 435 under cost of sales. Let's look for our vehicle expense. Where's vehicle expense? Here you can see we deducted. Okay. And very important, guys, you must register what financial statement do they want me to do? Because each one we're going to do it very, well, not very differently, but it's affected in different ways. When we're doing a post-closing trial balance, we're adjusting the balance of that account. Whereas if we were in the general ledger recording these adjustments, we would actually be recording the amount by which we are adjusting the respective account. Okay, I'm sure you've seen this difference as you've been practicing. I might just take note of that. So inventory, let's see. I think I forgot to add that to trading inventory. Okay, so anyway, let's go. Next one, the owner, Miss Layla, took goods with a selling price of 900 for her own use. So this is obviously drawings. The goods were marked up at 25% on cost price. This transaction has not been recorded yet. So in other words, we need to record drawings. And remember, this is drawings of trading inventory. So trading inventory is decreasing, yes, and drawings, okay, is increasing, yes, okay. So we yes, now if we're in the general ledger, we'd be debiting drawings and so forth, so forth. But here we're in the post closing trial balance. So what are we going to do? We're just going to be adding and subtracting. So exactly what you guys said, where drawings is increasing, and then obviously your trading inventory is decreasing. So again, yeah, I think we did not do the things that needed to be done. Trading inventory. So I'm like you guys. You guys are now influencing me. I don't do my homework. Huh? Students are there. Now look what you've done to your lecture. Look. Yes, you do. You do. So remember, we have to do our model. So maybe let me do that. Because remember, if I delve too much into it, you time. So what's the price? So we need to work out the cost. Okay. So we have to do our model. Cost plus profit is equals to selling price. Okay. In the question, did they say the markup is on cost or on selling price? What? They said on cost. So we know cost is 100. 25. 125. Guys, please don't forget this thing. We spend so much time. So then obviously we want cost 100 over 125 times 900. And you should get 750. Well, here they said on cost. So since it's on cost, we know whatever follows the on, if they say above, then we know whatever follows above, and so. Yes, I'm glad you remember. Okay, so did you get 720 or 750? Okay, all right, so you should 7. Yes, drawings, and then obviously your trading inventory. Yeah, so I just didn't do it, but do it on your side there. Okay, right. Yeah, Bob. Okay. Should I zoom out? What's fine? Okay.
I'm taking she's busy. Busy with how much. It's not too much. I don't see this stage is one. It was 8. People used to stay. Put that man. And then I asked her for people. She looks at me funny. I'm like, she's like, then she goes to the beach. What ask me? She might used to ask her baby. She was like, then when I put that together, I'm like, what the fuck, dog? Pay for the pay. I pay for that thing, but you asking, like, the people are there. She opened the door, asked that other. If we do each other time, yeah, let's give me the pay. Let's give me the pay. That whole 2 minutes she was like, it's even new paper, but finished. I had to actually to pay past the edge. It was there, she killed me, dog. You have to take this. The exam lines. was a soft one, to be honest.
Okay.
But
So guys, I would advise you to ignore these calculations. They are mine, but I'm just getting mine.
What are the previous in the 80s?
Oh, yeah, it's the second time. Yeah. I want to move up now. I'm stepping too much.
What could you like?
So this is actually what I
195.
You get the handle and give
Probably
it
say it now. That's what so guys. I think yeah, with this one, all right, it can never be 100 to 100 diamonds. I think if you read the question again, it's speaking truth. It's saying that it was incorrectly done in the vehicle expense. So we know for a fact, vehicle expense needs to be replaced. Okay? Now, I believe that here then it's supposed to be just the cost of sales. So we are assuming that the trading inventory was reported correctly. Does that make sense? Remember, when it comes to errors, we say we must just work off of the information that is given and not assume that there's more errors that need to be rectified. Does that make sense? So that's what I'm working on. Okay. But again, it's my suggestion. So if you really confidently feel, based on also the other exercises that you've done, that you also feel you need to correct trading inventory, go ahead and do it. Okay. But yeah, okay. Suggested answers. Emphasis on suggested. That's it. So we dealt with the, what was the second one? Second one was a markup. Okay, we know what to do there. Then, like I told you, a physical stock take revealed the following: inventory 18,000. Okay, stationery 150, packaging material 360. Okay, so we know packaging material, stationery, that's going to affect consumable stores on hand. Okay, and it's also then going to affect stationery, and that we're going to reduce stationery. Let me maybe talk about these things whilst they're in front of us. So where's stationery here? Let's just finish this and I'll get to you. So there you can see we deducted the 150. Packaging material, where's packaging? It's there. We deducted the 360. And what have we done? Consumable stores on hand. Can you see we've added those two amounts? Okay. And then obviously your trading inventory, you then are supposed to calculate. So I had something against trading inventory. Let's see, trading inventory, how much? It's 22,000. 168. Okay, but physical stock take says we have 18,000. So we then now need to reduce that by whatever the difference is. Does that make sense? In bracket. His hand was up first, so let me deal with him, then I'll come. Drawings, and it's going to affect trading inventory, and it's going to affect, yeah, drawings and trading inventory. 720. This transaction was not reported. Yes. Oh, yes. Sorry. Yo, guys, you're 100% right. It's cost of sales that's affected, not trading inventory. Cost of sales is affected because whenever we have a discrepancy in inventory, in other words, a deficit, it's cost of sales. We send it to cost of sales. Okay. We reduce the trading inventory like we're doing in this transaction here because we did a stock take to check how much is there. But yes, any deficit, it affects cost of sales. Thank you, guys. My guys who are watching this.
Like this man.
This man. Sorry, so I know she's next and now we'll come back to you. Okay. If it's around that, it's also fine. We'll come back to you. Yes. Yeah. Okay. Yeah. I think I get what she's asking, but let me allow you guys to also contribute. Um, for say anything. I know what you're saying. Basically, if we have an adjustment where we are losing inventory, but then prior to that we actually have an adjustment where we're adding inventory, what must happen? Is that the nature of your question? Okay, yeah, you guys can go for it, and then I'll share. Yes, before this one, we have a situation where, let's say we had the company bought 2,000 worth of trading inventory, but it was not recorded. Yes, you plus. Hmm. So Mary had a hand up, and then you also want to respond to it? Okay, as soon as, let's just deal with her, then we'll come to your question.
Yeah,
Wait a minute, I thought you were contributing to her. Yeah? Mm-hmm. Uh, that is a relevant question. I don't know. I think my brain switched off after the break. I think my brain switched off after the break. I know, let's not take another break. So, look, let's do this. At number two. Okay, let's do this. Let's do this. Let's start at number two. Did anyone have any other question outside that? Because your question seems like it was related to question. Yeah. Yeah. So we're taking away that 720 because of drawings, isn't it? We all understand at least the nature of the transaction. So it was because of drawings. Okay, so this was not recorded. Okay. So I think for the sake of playing it safe, and I think you guys are presenting great arguments. I don't know if it's because of what you're studying or why. But I agree with what you're saying, in that this is obviously going to affect trading inventory because trading inventory is decreasing. So I guess it would be best to then just also deduct from your trading inventory as well. So in addition to cost of sales is definitely affected because it's a deficit. Okay. Drawings is definitely affected because that's exactly what the owner is doing. They're taking drawings. And then let's also then just reduce your trading inventory. Okay? Because if we're saying this wasn't recorded, then that means it should reduce trading inventory. Yes, that's what we're going with. Okay? Yes. Are we going back to now your question? Okay. Are you answered on yours? Let's hit the first one, then we come to this second one. Okay? Yeah. But then, which one should I start with then, after you've asked? The second one or this one? Let's start. Let's finish the first one. Okay. So, if you get a situation like that where they say we bought new trading inventory with 2,000, but it was not recorded, add the 2,000, because what it's then saying is whatever's on your trial balance is not reflecting that 2,000. It's not inclusive of the 2,000. So you're going to add it in, and then obviously the next adjustment will be then deducted. Does that make sense? So you will then deduct according, because if they've thrown it in additional information, that means it has relevance. Sometimes they might be tricking you out for you to check. Like for instance, where they say rent income, we have 2,000 every month. So our rent income is 2,000 every month. So therefore, we have 12 months of the year. We're saying, okay, rent income should be 24,000. So you need to check 24,000 by way of your calculation. Does it match 24,000 rent income that you have in your trial balance? Okay, so sometimes they'll just throw in additional information in there, but they might not necessarily need an amendment or an adjustment. 435,000, was that the second? The 435,000, an amount was incorrectly debited to vehicles expense account. Okay. So you wouldn't be deducting. If we're going to, yeah, you'd be adding. Yes. You would then have to adjust, yes, that 22,000 day. It would be affected. Mhm. I want to make sure we're on the same page. So let me do this. Okay, this is an illustration. Okay, so we have this 22, 168. Yeah? Is it 68? Yes. Then we're saying, okay, plus the 435. Okay, right? Then we're saying, okay, we have deductions also, right? 720. Okay, so obviously the balance on our trial balance is not the correct one. Does that make sense? Then we went on to do a stock take. So whatever that balance now is, this is an illustration. We're not saying we've included all the amendments. Does that make sense? Let's just say this is now 25,000. Can you see that that 25,000 is different from the 22,000 that we actually have? It's an illustration. Now we're saying we did a stock take, but we're saying we only have 18,000. So then obviously we need to account for the discrepancy. Yes, it's going to be, then we have a 7,000 that needs to go to, remember this is going to cost of sales. And then this balance. Yes. You see, this is why I was saying that I want to just do a illustration of what we must do. The fact that we have an adjustment for 750, we have to then obviously adjust. Where are we getting the minus 9,000 from? No, that's nine. It's 900. Yeah, that's the selling price. 720. Remember, whenever we have drawings, we account for it on selling price or on cost. And also trading inventory. Remember, trading inventory is recorded on cost or on selling price. It's on cost. Because remember, we buy our trading inventory, whatever it may be, at a cost price. But we don't sell it at the cost price. We add a markup to it, and then that becomes the selling price. So whatever we bought for will be cheaper than what we sell for. Does that make sense? So we value trading inventory at cost, exclusive of that, drawings, inclusive of that, because we cannot claim back the VAT on drawings. But here they said ignore that. So we're using 720 for both drawings and for trading inventory because we're ignoring them. Does that make sense? And I completely did not understand what you asked, to be honest. So thank you for coming back. Yes. Yeah. So, in light of the arguments that you have been presenting to me, I would, when it comes to trading inventory, my suggestion would, let's read this transaction again, just to make sure. An amount of 435 for ferret on purchases of trading inventory was incorrectly debited to the vehicle expense during January 2021. Correct the error. Okay. That's the thing. They didn't say anything about the trading inventory. Okay. They've only mentioned that it was incorrectly put to the vehicle expense. Okay. When this should have gone to the cost of sales. So, guys, I'm leaving it to your discretion. Remember, these are suggested answers. You can, because otherwise we'll be going back and forth the whole time and we won't finish. Okay. 70,000. I'm confused now. Sorry. Take me step by step. Yes. Our the drawings amount is 720. That's the value of the drawings that took place. Yes. We are subtracting it. Didn't we say we're going to? That's what we've been discussing this whole time. That we are going to subtract from trading. Okay. No, yeah, like me today. It's just not. It's not the day. It's not our fault. It's not our fault. Yes, these are different questions, guys, because we need to progress. I will never revise. This is the last time. Yeah. Yes. Guys, this is one thing I'm sure of, right? If you go and look at your past exercises, also if you go and look at 1A, question, I think 5 point something towards the end of that unit 5, and you're dealing with errors and amending of errors, you'll see that we work off of all the information that they've given us within that error. We don't now say, okay, since this would typically affect also trading inventory, let's also change trading inventory, because they said nothing about the trading inventory account. Okay, but we do know for a fact that vehicles expense was affected. Again, but like I'm saying, these are my suggested answers. So if you really feel no, let's also adjust trading inventory, it makes sense for you to do so. But then we're assuming I would change trading inventory if they said this transaction, something to the effect of it also was not recorded in trading inventory. Does that make sense? Based off of what I've seen from your textbook. Well, if they said we also forgot to record it in trading inventory, or something to the effect that would allude to something also needs to be done there. Does it make sense? But again, suggested answer, so please run with what you feel is most ideal. Guys, I have to continue. I have to continue. We won't finish. Mhm. It also, remember, when we're on the perpetual inventory system, all those individual expense accounts that we'd have under the periodic, they would be entered in your trading inventory. So a carriage inwards, import tariffs, yeah, and then also this one would then affect trades. You see. But here, obviously, we're dealing with the amendment of an error. So you need to interpret and say what needs to be fixed. Mary? Hmm. Mm, yeah, so I would suggest that we leave trading inventory alone. That was what I would suggest in correction of this error. But I would amend drawings and I would amend cost of sales. That's my recommendation. That's my recommendation. Yes. This was in relation to the question I thought she was asking. Okay. Yes. This will already be affecting your trading inventory. I'll show you why. If you look here under trading inventory, we're saying it's 18,000. But in the pre-adjustment trial balance, how much did we have for trading inventory? 22,000 something. So can you see in our books, the whole at the end of the financial year, we said according to accounting and according to our system, we have 22,000 worth of trading inventory. But when we went and did a stock take, we realized we only have 18,000. So by virtue of correcting that to 18,000, we are actually recording that no, there's been a deficit. And that deficit, you'll see if we had it in the T accounts, you would actually post on the credit side in the trading inventory account cost of sales. So can you see it is affecting trading inventory? And then the other account is obviously cost of sales. Cost of sales will increase, it will be a positive. All right, that's how we record it. 7,000, what is the answer? What do you mean? You'd write 18,000 because why? Remember, this is what I was saying. You're dealing with different statements. If we were in the general journal, we would be recording the 7,000 because that would be the adjustment of our trading inventory. But here, remember the trial balance. What is the trial balance? The final amount for any respective account that we looked at. So we know our trading inventory is how much. So how much should we put on trading inventory? There we go. Okay. No, yeah, no, I know. You're just making sure. But I had to take you back to there so you understand why we're doing it that way. Because in another statement, you're going to see it's different and you'll be like, what's going on? But now when you understand that context, then you should be fine. Yes? No, you're going to have to take the previous adjustments. That was what her question was. You're going to have to take the previous adjustments. All of wherever cost of sales was affected, or wherever inventory, should I say, was affected. Does it make sense? I have added the 425. Why are we adding the 425? Because remember, this is a cost. So it has increased our cost of the product that we've just sold. Okay? Then why am I minusing 720? I see. It's the drawings. Okay? And then can you see here, if you look here, here you can see we're minusing the 18,000, which is the inventory we should have. And then we are adding, we're minusing it from the 21,883, okay, to find out what is the deficit between the inventory we thought we should have and the inventory we actually have. Does that make sense? Because we know that the deficit gets sent to cost of sales. And what are we doing with that deficit? So yeah, I didn't write it, but this deficit should be added to cost of sales. Can you see that? Am I answering your question? Is there anything that we haven't touched? This is going to be added. Sorry, it just hasn't been shown. No. Deficit account, no. For your purpose, in accounting, generally speaking, we do have that. But from your textbook, from the memos, I've seen, and we had this discussion the other time, remember, Mary? They take any deficits to the cost of sales. Yes. The haircut. Guys, I don't even know how much time we now have. Time is done. There you go. That's the end of it. No, you won't catch the whole thing. Oh. Let me zoom in for you, since you've been so patient. There you go. All right. All right, guys. So let me quickly just touch on the other things here. So you've got, you've got interest on mortgage. Okay, guys, look, there's nothing brand new there. You're going to also have depreciation on point 11. You're going to have an adjustment for credit losses, all right, to the amount of 106. Okay, we've dealt with all these adjustments. Let me see. Is there anything here? An amount owing 94 Rand. Number 8, to a debtor, irrecoverable with credit losses, and obviously this is going to affect your debtors. Okay. Yes, your debtors control. A tenant has been renting a part of the building since 1 June 2021. Okay, 2,600 per month. So you say then, okay, from 1 June 2021 all the way until our year end, how much is that? Okay, then you see, is that the same? Nothing new there as what we have in the pre-adjustment trial balance. Number 7, an amount of 250 was prepaid. Okay, so that's telephone and then your prepaid expense. Okay. Now these prepaid expense, income received in advance, accrued expense, accrued income. Can you see in your pre-adjustment trial balance is not there? It's not there. You guys, having played around with adjustments, need to know that, hey, I need to create these accounts by virtue of what adjustments have taken place. Does that make sense? Okay, right. And then the last week wages of August are still to be paid. Okay, so 350. So that's obviously an accrued expense. And then salaries and wages, as you can see here, salaries and wages, we're adding it in. Okay, then interest on fixed deposit has been received only for 6 months of the year. All right, so that's obviously an accrued income. We're owed interest, and then obviously interest on fixed deposit or interest received is going to be affected. Okay, those are the two accounts. Then the last one, your interest on mortgage has been paid in full. Interest on mortgage. However, 6 months interest has been paid in advance on the short-term loan. Okay, so obviously, if something has been paid in advance, that means it's also again a prepaid expense. Okay, so if you look there in the answers or suggested answers, again, I must say suggested, okay, you'll see the calculations there. All right, and then we're basically calculating how much interest on loan you should have, and then saying how much do we actually have, and then making sure we plug in what we should have. Okay, right. Number 5. Did we do? Oh, that is number 5. No, that's number 4. Okay, so we're done with question 3. Question 2. Awesome. This is what? Theory questions. No, or I can just make you take pictures.
What you eating bush?
It's too small.
Why is it bush? Oh, take a picture.
What did we do? Sorry, I ran away from
I made him simple.
I'll think about that. I'm just in the
Sam.
No,
Is it this one?
we're trying to make it large. No, here. Why you?
So here you go. So here, guys, question 1. They're giving you scenarios, all right, and then they want you to confirm, is it an adjustment, error, or difference, should I say, or is it a timing difference, okay, or is it just an error altogether, okay? So you guys must know, what is an adjustment difference? What is a timing difference, okay, right? Otherwise, you can't answer this. So this is how we're testing, you know, bank record. Because these are basically all the scenarios that you typically could get in a bank record that would result in your bank statement balance and your bank account in the business not being the same. And then obviously they're asking, what should we then do? What's the action that we need to carry out? So that's your question 1. You guys can go through that in your time. Guys, I've been looking at the past papers. They like to ask those questions. Your adjustment difference, your timing difference, and so forth, so forth. What is the action that needs to be done? Question 2, another theory question, but now we're dealing with your debtors and creditors reconciliation. And remember that exercise that we did together where we had your debtors list, your creditors list, your debtors list, your creditors list, your what is this? Creditors list, all 4 of them. Okay, this is what we are doing. Okay, so please make sure that you understand that. Have you taken a picture of this? I wanna. We need to shut down. Okay, I'll send you guys this. Don't worry. No, she needs to set up, guys. We need to allow.
The thing says 10 o'clock that ends.
Yes.
Relax, guys. Relax. All right. All right. So let's pack up. I thought I was in room 19 for the next session.
Yeah?
But
Yeah, you didn't see it. I told you.